After a lackluster start to the year, are we approaching a bigger breakout for the energy trade? Guy, I'm going to start with you. When you look at those charts, does it make you feel like it's only higher from here?
First of all, welcome, Courtney. It's always great having you, number one. Number two, there have been many times that I've personally been faked out to the upside on these crude moves, specifically on whatever this is, geopolitical risk or concern. But in terms of the stocks you just mentioned, yeah, they do feel like they might have sort of inflected a little bit. I mean, I'll look at Valero, for example, bit of a double bottom. I think it's breaking through about a 2-year downtrend, close around 134 today. You know, you get this above 136, and I think it's sort of off to the races. So although it's only 3 or 4%, I think, of the S&P 500 now, the energy sector, I do think there's something going on here to pay attention to.
Steve, you had some interesting thoughts that we were talking about when you're looking sort of at the entire market and what moves with bull cases, what moves with bear cases, and you're like, look,
yeah, I think people got lopsided, and if you thought that the market and the economy was going to go into a recession, you have to be a seller of crude. And if you think, which is the fact, that OPEC is continuing to increase supply, you have to be a seller of crude. If that doesn't take place and the market continues to rally and the economy continues to do better, something has to be offsides. In this case, it was the energy space was offsides. Those stocks were priced a little bit too low. But let's remember, though, out of the S&P, the energy space is only about 3 or 4% of it. Yeah. And when you look at tech, that's 33% of it. So before we get excited about the move, can it last? To Guy's point, there's a lot of head fakes in the energy space. I think there's going to be an oversupply, but this is just a minor correction, in my opinion.
Tim, what about the geopolitical reasons behind this move? Does that give you any concern? Does it feel more defensive?
I would not be buying oil on geopolitics, although buying oil on Russia, Ukraine was the right move, and I think a little different than what we have here. It's never really right to buy it on a hurricane. It's never really right to necessarily buy it even on... You know, we have weekly inventory numbers all the time. There's a lot of volatility in there. I'll say the following, though. I mean, Steve's right to point out if there's a growth scare, that's, to me, going to trump almost any of the fundamentals around the supply side. The supply side is very important, and it has been under control and relatively stable over the last couple of years. If you listen to the EIA, though, the headline yesterday, today, whenever it came out, was that U.S. has peaked production on shale. And at least if you think about fracking and some of the drillers here at WTI, which is the grade that we trade off of here, actually, they're below break-even levels right now and where WTI is. So if you think that actually the U.S. has peaked in terms of oil production, that's something that's, should be constructive to oil prices here. I think if you look at back to, some of the names Guy mentioned, I look at the integrated players, and I look at even some of the European integrateds, whether it's Total or Royal Dutch Shell, and I love the story because I think their dividends break even somewhere in the mid to upper 40s in terms of Brent. I think the dynamic around demand and where the economy is, I think, was also a little overstated, at least for now. I think we're all questioning where we're going to be in the second half of the year. But right now, I think this is a trade that actually, with a handful of these names, I can own Chevron long term. I'm not worried about it.